Hello, everybody. Welcome to the Sunday live stream with Jerry V. Hall. Today, we're going to talk about dollar cost averaging and fear-based and why it works out really well in the long term, but it doesn't work in the short term. We're going to go over some examples. So, Jerry, welcome back to the show on a Sunday.
Hey,
thanks for coming by.
Nice to see you, man. I know you were traveling last week. How was France?
Well, France was great, but I was in the Gulf of America on an actual cruise because like I told people, and I had to lie to everybody because don't let anybody know where you're going, because that's a great sure way for a wrench attack. And somebody like myself who's on YouTube, it doesn't really matter. If you tell people like where you're going on like your social media, someone might find it, someone might get to you. So don't do that. Just be a little bit secretive and go from there. But thanks, Jerry. It was a great time.
I do. I post photos and talk about things after the fact, not during the fact.
Exactly. After the fact is a great way to do it. Hey, also happy Father's Day to yourself and all the fathers out there. Congratulations, everybody. We made it. And we didn't kill our kids. So things are going pretty good. They love you. Just remember that. Let's get into it, shall we, Jerry? So this all came from a post which I did last week. And I said, hey, just don't think about it. Don't make things so difficult. You know, the less you do, the more you earn, essentially. When you try to do too many things and move things around, it kind of screws things up. So usually the simplest thing works. And I said, don't think too hard about it. DCA every day. Enjoy your life. Number go up. Do less, make more. Makes sense, right? And I think too many times we're always thinking about, okay, well, I should do this, and maybe I should do a little yield farming. Maybe I should take out a loan here. Maybe I should sell this other big thing to put in this other little big thing. And before you know it, you're like, where the hell did all my gains go? That's right. I did a little bit too much. So I put this out, and there was a response from Crypto Ricardo. Good guy. I've been following him for years now. And he says, hey, just DCA Bitcoin only when the Bitcoin fear and greed index is in fear, and you'll do much better. And I thought about that. I go, yeah, it makes a lot of sense. We should just do that. So before we get up, we go into those results. We talk about the fear and greed index and actual, short-term versus long-term. Jerry, I think you dollar cost average for the majority, but do you do any other types of like accumulation type of strategies?
So I dollar cost average. So let's say I have $100, I have $1, and that dollar is I get that dollar every Friday at 5 o'clock. 80%, 80 cents of that dollar will go to Bitcoin, and 20 cents of that dollar goes to a small handful of what I call emerging market type things like, AI and cloud computing type projects, right? Yeah. Because I believe that is the commodity of the future. And so I'm putting my money where my mouth is. But the majority of my dollar cost averaging goes into Bitcoin. And I agree with you. So I did, and you'll show it, I know, because I saw you copy it. I did the same thing back in May on my Facebook. I said, hey, it's simple. If you just do $50 every Friday, look at what would happen. This is what would happen if I had done it from this period of time. Here are the results. Oh, yeah, there it is right there. Dollar cost averaging is the simplest, most profound thing that we can do, because what we're doing is we're leveraging a very skewed monetary system, right? That rewards accumulation of assets and absolutely wrecks people who live their lives denominated in the dollar.
Right. Exactly.
Yeah.
Denominated in the dollar. And it's a good strategy. And I think Mark the Shark lays it out pretty well. He said, you know what? DCA is a fixed strategy. You don't just turn it on, off and on when you feel like it. And then, let's be honest. You've been in for a long time. I've been in for a long time. People who are watching have been in for a long time. We are all subjective to the emotions of the markets. So sometimes it's just better just to let the emotions go and just say, I don't really care. I'm just going to dollar cost average. And I got to tell you, if you've been dollar cost averaging since, just year, 2 years, 3 years, the farther back you go, the better you've done. And so that really came down to the question, which is, why don't we just make this even more return on investment, and how much we can increase that by just doing what we call fear and greed index. So first of all, I took the data from, I stole this from Ben's website, as I like to steal as much as I possibly can. And I took a look at his Bitcoin fear color coded by the fear ingredient index. Now you can find these on multiple websites and do this, but really it goes like this. So the 0 to 10 level is like extreme greed. 10 to 20 is also, I think, extreme. 20 to 30 is greed. 30 to 40 is greed as well. But once you go to 40 and 50 on this timeline, it is at neutral. So taking a look at this is all I really care about. I just care about these fear ingredient index, and you can see them right here. 3rd of March 2020, price was oh, Jerry, look at this, 8,770. That's a good time to buy, I think.
Yes.
Right? Yes, exactly. But I will tell you, I mean, how about this one? 16th of February 2020, it was 9,900, and it was in greed, almost.
Good time to buy.
Good time to buy. But when I took a look at this, I said, okay, well, here's the rules for dollar cost averaging by fear ingredient index. You can only buy when it's at extreme fear or fear. The days that you're not purchasing, you probably should stack fiat, which sounds weird, right? So like, let's say it takes you from, and I'll just show you over here. In this situation, I want to show you 2 time frames because these are the ones like the most drawn out. September 24th, 2020 to March 1st, 2021 is roughly 160 days. It's around 158, 159. I just rounded up. And during this time, if you were going to buy like $10 worth of Bitcoin every day, what you would do is just not buy during those days, but then stack that fiat. Okay, and say, okay, for 100, Jerry, quick math here, 10. If you could help me, $10 and 160 days, $1,600 million, I think it is.
No one. 1,600.
Okay, 1,600. We'll go with yours. So $1,600 there. And what you would do is you'd say, okay, I'm not going to buy this whole time because this is in greed. It's greed, 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 extreme greed, extreme greed. The price is going up, but once it goes down to the fear level, then you dump that $1,600, which would be March 1st, 2021. And then we also want to take a look over here, September 12th, 2023 to June 25th, 2024. And we'll take a look at the entirety of this time frame. So again, I picked these 2 points because you can see it's been a lot of greed, quite honestly. And from here to here, it's just like accumulating here, but then you got a bunch of greed. So around here is just a time frame of when you could actually not put it into the market, where you would do right here or over here because everything was in a little bit of a fear. So if the price points for the greed, you're just holding on the dollars and you start buying. Okay, enough explanation. Let's go to it. So the first example is this: September 24th, 2020 to March 1st, 2021. Here's what you would do: you take that $1,600, you'd lump sum. Again, I use Ben's. I stole from Ben. I use this DCA simulator, which is actually free. If you guys want to, I would definitely recommend you do this. Go to the website, sign up. That part's free. And what you would do is, if you had $1,600 and you bought that on essentially March 1st, 2021, you would have bought 0.0356, which is pretty good because you have 0.03. Today's portfolio, that'd be worth $3,763, essentially 135% gain. I'm just saying, that's not bad. That's not bad. Jerry, any insight in this one and doing this?
The one insight is what an incredible opportunity all of us have, regardless of the specific methods we use, that we can get into an emerging asset class that is only getting stronger every day and will outgain every other investment opportunity on the planet. Mic drop. I mean, it's real simple. I'm very grateful to be in the position that I'm in today. I only wish I had more. And so if you allow me just real quick, I'm blood type O and have 2 very healthy kidneys. One of them I'm willing to give up for 1.5 Bitcoin. I'm just putting it out there.
So that, Emily has a kidney. There you go. And you don't even need both of them. So
I don't.
you don't.
But I do
You
need
actually,
1.5 Bitcoin.
yeah, exactly. I think everybody needs a little bit more of that. Yeah. So that is, so take a look at lump sum and what Jerry talked about. It's pretty good. And again, we're doing a lump sum. We're taking those funds that we saved when everything was in greed. We didn't want to buy during the greed or extreme greed areas because prices was going up, only during the fear time. Now, if we would have just said, you know what, forget it, I'm just going to DCA equal amounts. I did it $10 a day. I bought Bitcoin. I started in September 20th, 2024. Excuse me, September 24th, 2020. I ended on March 1st, 2021. I spent, well, 1,590, like $10 a day, 160 days, right? I accumulated 0.08 Bitcoin, and that's $8,623. That's a 442% increase.
Wow.
So again, in the short term, fear and greed, it can work. It's just you got to go farther. And that's the first example. The second example, again, we're going to take a look at September 12th, 2023 to June 25th, 2024. Again, a long time of when I can stack those dollars and not put it into the market. How would that look? Well, and this is different. If I lump sum that, 287 days, quick math, that's $2,870. I started, and of course, I only bought on June 25th, 2024, just one time. Today, I invested 2,870. Today, it's worth 4,915 because I wasn't doing anything. That's it. Still pretty good. You're up 71%. Now, what would that look like just straight up DCAing? You put $10 in a day. You start September 12th, 2023, June 25th, 2024. You're actually up 134%. You invested 2,880. Yeah, $10 here and there. You got 0.06. You got 6,761. So again, this is just looking at less than a year. And the time frame that I chose was because there were so many days that you could actually stack those dollar bills. And before we get into the long-term effects, which was quite shocking, Jerry, what do you think? Give me your insight in that part.
You know, it again, back to simplistic rules. Being in the market always is more advantageous than trying to time the market. Just be in the market, continually be stacking in the market. Monetary policy is an investor best friend, right?
Yeah.
The way that governments have decided to not have tax receipts fund its endeavors gives us the opportunity to convert a depreciating asset into an appreciating asset. And if you can do that daily, you're going to be better off than trying to time specific spaces of the market, because nobody, not even the most sophisticated investors in the world get it right more than half the time.
Yeah. And it's all about probabilities. Yeah. Because I've talked to traders and they're like, well, it's just probabilities, Rob. If I'm right 53% of the time, then I'm in money. And if I'm not, I'm out. But I've been, of course, all the traders out there will tell you how great they are. And I'm sure they are. I'm sure every single one of them are winners.
Especially the ones that have a course that you can pay for.
Oh, stop that. Stop that, Jerry. Stop that. But it's true. And I will just, and the reason why I don't trade is I'm not that smart. I just can't. I tried it when I first got into crypto and just didn't work out for me. But other people, it works out for them, and God bless you. That makes sense. So we talked about this, and we talked about the short term for fear and greed index dollar cost averaging. What about the long term? Because I can't cherry pick data, right? I mean, I can cherry pick data all day long and make you think whatever I possibly can. But I took this data and I ran this through Grok. And I said, Grok, do me a favor. Take a look at the fear and greed index and let me only buy during extreme fear and fear $10 as opposed to dollar cost averaging, but go all the way back to the peak, 2021, because that's when we had we were seeing more euphoria. Oh. So from January 1st, 2021 to June 10th, which almost now, 2025, you can see that a fear-based DCA value is in green there. you massively, or you outperformed. You did a good job. You outperformed just a straight up DCA value. Now, what does that mean? That means that you have to, when an alert comes in where we're in greed, you have to make sure you buy or buy that, or excuse me, when it goes to fear, that you buy on those days. When it's in greed, extreme greed, you have to ignore it, check it all the time. And that's cool. But you can see that here over these 4 years or so, 5 years, you would have done this. You would have had 48,000 versus $65,000, which is quite a bit. Mm-hmm. So I hope that helps people. And, it's like fear and greed index. But Jerry, what's your thoughts on, do you want to switch, maybe go to a little fear-based DCA?
So here's my thought on it. Jerry manning the controls, no, because I am inconsistent. I'm a human. I'm flawed. But do I want to employ an AI agent?
Yes, that's another thing.
A DEX with a set of parameters that follow the exact graph that you just showed, right? So I fund it accordingly, right? I fund the bot accordingly. I deploy the bot on a DEX that has the assets that I want to participate in, and I let it do its thing based off of the parameters in which you just showed that graph. I would do that in a heartbeat. I would do that tomorrow. For instance, if Nathaniel Minton from FlexPoint Studio said, "Hey, Jerry, I'm going to have Talos do that for you," right?
Yeah.
I would say, where do I sign up?
Yeah. That's exactly.
I would stock it with some money so that it could do that.
That's exactly what I was thinking about, because I don't like to keep my crypto on exchanges, right? So I take it off. So for selling it, that wouldn't work. But like what you just said, this is buying, right? So solo buying. And then if you're doing that, if you could just have an AI agent just say, hey, once we get to 40 and below, as far as fear and greed, once we get to in the 50s and 60s, don't buy anything. 50s, 60s, when you want greed and extreme greed, don't buy squat, because those prices are going up too much. I only want you to buy when we go into the fear and extreme fear, and just do that. And I think if you have an AI agent, you could do it pretty easily. But then actually thinking this through, I don't need to keep crypto on an exchange if I have an AI agent. I can just give them access to, say, like a hot wallet that I have that's just sitting around. Use this hot wallet, transfer funds to the exchange, sell it when we get into XYZ, but then do the buying when we're only in fear and extreme fear. And then, of course, the other option is you just parlay all that and say, forget it. And then also do what's called dynamic DCAing. There's a video on that, which goes into the risk levels. But I'm sure most people know about that. But again, look in the description. It's in every video I've done. So anyhow, Gary, that was a good one. I appreciate that.
Absolutely. You, of all people, know the importance of discipline. And when you factor that in, if you need something extremely regimented, which this particular endeavor would be extremely regimented and attention to detail. If you're busy in your life and you have all other kinds of things, all you have to do is miss 3 or 4% of the opportunity that the algorithm would not miss, and your results could be skewed. Like, I saw a man show a chart that if you miss the 10 best trading days, that your results go from magnificent to mediocre. And that's only 10 days. That's only 10 instances. Well, I'm perfectly capable of messing up 10 times in a year, or missing something, or being too busy to do it on that day. Right?
Yep, that's exactly right. And you know what? I've talked about this before. Here's what's going to happen if you flee the stock market for cash. Where did it go? Oh, yeah. So the chart below shows how $10,000 invested in the S&P 500 for the 20-year period of 1999 through 2018 would have performed under various scenarios. If you missed the 20 best days, you're down. What the hell? That's crazy.
Underwater.
Wow. If you would just sit in cash, if you miss 30 days, you're down 40 days, 4.2%, 5.974. If you just would have stayed fully invested, almost $30,000 for your 10,000. Jeez Louise. That pretty much, excellent point, Jerry. Excellent point. Whew, that is scary. But you know what else I think about is this is like I see the dollars in my bank account. I look at it and because I get notifications every day of, what's in my bank account. And I just think to myself, what is that cash doing for me just sitting there? And how do I make it work for me? If it's not growing, what the hell am I doing? Right. And I just think about that when I'm buying Bitcoin or some alts like we talked about yesterday. But I just don't get it.
Yeah, I no longer hold cash for periods of time. My replacement for an emergency fund is a small bag on Coinbase earning 4% in USDC. Now, are there inherent risks that come with that? Yes, they are. But understanding the debasement of our currency, I'm kind of okay with it. Like I've accepted those risks for that amount of money in that yield profile.
Yeah, it makes sense.
Yeah,
as long as
everybody's got to have their own like line in the sand. You're a little more rigid than I am. You don't leave anything on an exchange, and for good cause, right? For really good cause. I could never fault you for that, right? You're making decisions based on very sound information. I'm a little more risk taker. I'm willing to take a little bit more risk, but I want to earn some yield while that money sits there to try to offset the debasement that's happening on an ongoing basis.
Yeah, and just if it's an ongoing basis and you just want to de-risk, sure, go ahead. Now, I'm not going to say, and here's the thing, I'm not going to say that. Oh, and also as I'm rambling on, everybody, go ahead and ask your questions below for me and Jerry, and we'll answer them to the best of our abilities. But like when I'm doing all this, like I don't buy crypto and then take it off immediately. Like I just got back into Kraken recently, like a week or so ago, and it's been great. And I can't, once you dollar cost average on Kraken, you can't take it off for like 7 days. I'm not for sure if that's because I'm new. I mean, I came back as a new person, or if that's just how it is every time. But I got to talk to those guys and say, hey, if I'm going to dollar cost average, I want to be able to take this off within, at least 24 hours and then see what they say. But sometimes it's just because you're new to it or whatever else. I don't know if anybody has any insight to Kraken. Jerry, you use Kraken or no?
I love it. Yes, I do use Kraken and have since like 2019. I think I opened my account. I really like them.
Yeah. I never really got into it. But then there's also stocks, ETFs. And then I think the big thing is Coinbase One, you sign up for that, it's $30 a month, which you don't have any fees up to $10,000. But over on good old Kraken, it's like $4 or $5 a month as opposed to $30. Now they just lowered it because they're going to come out with this like Coinbase card, this credit card. I think it's a credit card. I can't remember. No, maybe I think it's a credit card.
It's like a debit card associated to your profile, your portfolio.
Yeah. But yeah, and they talked about giving you 4%. That's only if you keep a certain amount of crypto on the exchanges. And if not, it goes to 2%. And I'm like, well, I'll never get to 4%. So forget it. Let's see. So anyhow, here's a statement. Kraken is much better than Coinbase. We're going to find out. Let's see. Paul says, I hold physical gold and silver as my emergency fund, so at least keeps up with inflation. That's actually a good thing. I never understood why the gold bugs hated us so much. I own gold and silver. I don't know.
What's an interesting point? If you're holding gold and
Hold on, Gary. Hold on, Jerry. I don't hear you.
Can you hear me now? Hello?
I can lip sync. I can read your lips if you want me to again.
Hello? How's that?
Okay. Yes, I'm not mad at you. It's okay.
Am I back? No? Okay.
No, Jerry, I don't want you to start kicking your computer. Don't do it. I guess you got to come back and come in. Let's see. What else we have? Sorry, buddy. Jerry's having difficulties. For the record, Jerry loves Kraken. Don't tell the missus. Lord says, info from Australia says that unrealized gains are on the table to get taxed for. Do you foresee the U.S. following suit given the adoption of blockchain tech and Bitcoin? Jerry, here's a great question. Unrealized tax gains, a la Janet Yellen from 2 years ago. I guess in Australia, they're talking about it again. Here's my thoughts. Unrealized tax gains is the dumbest thing you can possibly do. I think it's used as a bargaining chip that some politician rolls out there to get something that he wants, and somebody's going to be a sucker enough to fall for it and go, oh, don't do that, whatever structure you guys have in Australia. Don't do that. Let's come to the table and let's work together. If he did that, he'd be the most hated person in Australia for unrealized tax gains. Because, good luck when the people that own the businesses have to start selling things off and they can't employ people. So that's my thoughts. I don't think it's never, I think it'll never be in the United States. Well, actually, don't say never. But. Jerry, what do you think?
Can you hear me now?
Oh, yeah.
All right, perfect. That is a really silly thing. And it seems like it's one of these tactics used to distract us from the fact that our governments do not keep a balanced budget, right? All governments operate under deficits, which is really screwy. They should, just like you and I are not allowed to live on a deficit indefinitely, right? We have to have our income meet our expenses. We do not have the ability to manufacture currency or assets that can be turned into currency. And neither should the government. And I think that is the biggest, it's a way to distract us from the truth, right?
Which is, what's the truth, Jerry?
The truth is that we don't earn enough or generate enough with tax receipts to cover the expenditures as a government. Right. And so every time, so when you hear somebody talking about using unrealized gains, it's in the context of trying to balance a budget. It's in the context of trying to minimize a deficit.
Yeah, and it's also good political theater.
Yeah, but it's not going to happen. No, the richest people in the world are not going to allow that to happen.
This is true. People like Jerry is not going to allow that to happen.
I wish.
How about this one? Mike asked, last week the SEC asked companies to update their Solana ETF applications. Do you think the applications will be approved soon? And again, this is a whole new office of the SEC. No more Gary Gensler. What do you think, Jerry?
I think we're going to see a lot of different digital assets become assets that are traded on NASDAQ, American Stock Exchange, New York Stock Exchange, the Toronto Stock Exchange. I think we're going to see a lot of different digital assets become products in those capital market structures. Yes.
Yeah. I think I got to agree there. I think we could see it. It's a weird thing because we're in like this limbo. We're caught in between the Gary Gensler nonsense and Choke Point 2.0 and a new administration that's trying to get crypto into the masses as fast as possible. Unfortunately, there's the crypto Karens of the world, Elizabeth Warren and her gang, and they're trying to just kind of stifle innovation and slow things down. I get it. You want to be safe and all those things, but I don't trust Elizabeth Warren. That's just me. Let's see. This is a question for Jerry for sure. Thoughts on the SEC versus Ripple lawsuit? Next update on 16th of June. I'd also like to add another question. What's going on with XRP and stablecoins in Circle?
Okay, so let's lead with the lawsuit. I think, again, a lot of this is theater, right? The main rulings have been laid down. Precedent has been set. The one element, and I'll tell you, I've been a real detractor against Ripple for a very long time, knowing that stable coins are going to be the preferred method for foreign exchange transactions, corporate remittance, even personal remittance. You can't have a volatile asset be in the middle of this denomination to that denomination through transit. And so now that Circle has stated and come to in a partnership with Ripple, and they're going to use USDC as a native asset on the XRP ledger. This is a game changer for Ripple under the same context why you and I invest in Tron, right? We didn't invest in Tron because we think Justin Sun's such a great marketer. We didn't invest in Tron because we think that it's got some DeFi application on it that's going to do well. We invested in Tron because we know it's got such a large percentage of the Tether market, and we understand that stable coins are the way to exchange value in the future, right? They are the future of value exchange. When I need $10 exchanged to you for $10, I need to get you $10.
Right.
We're not going to exchange 13 different coins from 4 different chains to get you that money. It's got to be quick and clean and easy, and stable coins represent that. Well, USDC going to Ripple is like, this could be if banks start, using their XRP ledger stuff, this could be good, because you could start seeing very large sums of money being settled on digital rails with finality and using XRP as a transaction fee payment mechanism, which is that whole burning of the XRP, which is what all the XRP army has been hoping for, forever, is an app that's going to reach 1 billion people. Well, guess what? A payment transmission app using a stable coin could do that.
Using a stable coin could definitely do that. And I think we were talking about this before, because you had talked about there's a lot of inroads that Ripple has built with all the infrastructure and the banks globally. I mean, they kind of got screwed here in the United States. They had to go globally, and I think they did a great job. But I guess, the big question is what kind of market share are they going to have with all these stable coins in the banks? It seemed like they're located in the perfect place at the perfect time. The question is, can they execute, and do all the banks want to start to use those? Because they sure as heck shouldn't be using Swift. It's awful.
There you go. Ripple could become the killer app to Swift. And that's all the XRP army has ever hoped for, right? I mean, that was when I got into XRP in 2018. Heck, I built my YouTube channel around XRP content for the first year.
Yeah, that was my first 100,000 viewers or 100,000 views by talking about XRP. Yeah. And it was like, because I mean, to me, when I first got into it, it just made sense. I'm like, well, banks suck and they need faster rails and they need the ODL, on demand liquidity. So why wouldn't they just use it this way? And it made sense. And then of course, Gary threw a wrench into all that. So we'll see if they can actually execute and come out. But I think a lot of the XRP holders that were buying during the those monstrous dips, they're reaping the benefits right now. Let's see. Here's one for you. Jupiter makes a point. Big Five bank patent pending filings for using Ripple as back-end rails for moving money. Just a matter of time. Some percent of Swift will eventually get to it. Yeah, I don't know if you guys have. When's the last time you did a wire transfer, Jerry?
I do every month.
Yeah.
I live in Costa Rica, so obviously I need to fund my Costa Rican bank from my U.S. bank. Every month I do a wire transfer. Costs me $15 a pop every time. And that's with Schwab. And I think that's I've heard other people spend more.
I spend $20, and I have to do this there's a charity that I work with. And there's also a specific bill vendor who only takes wires, which is weird. But I have to do it like that. And it's $20 every time. And then also if it's the weekend, if it's like on Friday, hey, sorry, I did the best I could. Maybe it'll get there on Monday, which is why I never understood why people would complain so much about like Solana being down for like an hour or something like that. I'm like, my bank has been down for 48, sometimes 72 hours, depending on the holidays. I'm like, it's not bad. And I'm just saying. I know some people like.
I have a different spin on a chain going down. It has nothing to do with the hour that it wasn't working. It was the fact that the code wasn't solid enough and there may be security exploits possible. If your chain goes down, it means it's not perfect. It's not hardened steel yet. And that's scary when you're moving lots of money.
Yeah, I just wonder if it's just because it broke because there's too much transactions, there's not enough, whatever. Or if it's like something that could eventually lead to a massive hack and the loss of funds. Now I know with different it's like decentralized exchanges, and we saw this on SWI as well and on Solana, is that some of these, projects, they get hacked because of the implementation that they do, not because of the underlying rails that they're using. I think it'll be interesting moving forward. Go from there. Let's see. Who said this? Gas fees. Read about Gottfried Leibrandt, former CEO of Swift, when he met the Ripple team. Really? A while back. He went straight from the conference to start Swift GPI. I did not know that.
He did.
Let's see. Solana's down for an hour. Why did you not tell me earlier? Let's see. I think that's it. Kranskinator. I can't see the government letting anybody come up with a stable coin. It will be kept to the major two and maybe a few large banks. I think they want the stable coins to come in because it's backed by what? The dollar.
I have a spin on this that is 180 degrees opposite of this statement, and they both could be right. But from where I'm sitting, it's in the U.S. is incentivized to continue to spread the U.S. dollar throughout the world outside of the U.S. borders, and a digital version of that in the form of a USDC or USDT is meets that goal, right? The U.S. wants to spread the dollar. The hegemony is only supported by the reach of the dollar and the fact that I'm transacting in it here in Mexico, that you would be transacting in it in the middle of the ocean, that somebody else is transacting in it in war-torn countries. I mean, look what's going on in Iran and Israel.
Yeah.
They're using dollars. Somebody's using dollars. The U.S. wants that.
No, of course. The U.S. wants that, and they want to, I don't know. I don't want to get into that whole mess. Just awful. And then Kran says, I agree with Jerry, but it's about control. And it always is about control. But sometimes you just can't help it. Like, do you think Yahoo back in the day, as they had their massive amount of control as far as browser goes, just kind of missed it with Google, and they had the opportunity to actually buy Google, and then just passed them by because technology.
Bought Netflix.
Oh yeah, Blockbuster. Damn, those were good times, weren't they? Rent a DVD, or no, even rent a tape, then have to rewind it. No one knows. Mostly people, well, some people know what we're talking about. But other people are like, what the hell is that?
I have been hit with several failure to rewind fees in my day, in the history of Jerry. Yes.
That's a good one. All right. I think that's it for the questions. Jim says, Happy Father's Day.
There was one question, and I wrote it down here. Fan Man asked me about what's the latest and greatest concerning Hypercycle.
That's a good question.
So, in a broad stroke, a really incredible piece of our expansion is our presence now on the base protocol, on the base chain, and the fact that and this is something that people need to understand. In our white paper, we call out for 21 million node factories. And regardless of how many different chains we will be on there, that scarcity number is going to be upheld in the code. So yes, we are on a new chain, but that doesn't mean we're doubling the amount of tokens and products and licenses in the system. They're just being allocated to other chains. And so this base chain node factory is called an ANFI, an advanced node factory, and it is going to come with licenses for all kinds of cool things, like an aimifier piece of software, an application that would allow you to create an AIM, which is an AI model, and deploy it on the network relatively easily. Right now, that is the world of coders and developers. But this aimifier application would allow guys like you and I to take an existing piece of software that we have and aimify it so that it can be utilized on the hypercycle network. That's kind of a cool thing, right?
That's a really cool thing, especially because everything's going to AI.
And then so that's a really neat deal. Stay tuned on the hypercycle socials for more info as the thing gets rolling out. But that base chain ANFI is live. And I'll tell you what, audience, come back next week. We'll do some kind of cool giveaway, and I'll give away 3 node factories from that new base chain to 3 people. We'll figure out some way to earn that in, like this or subscribe to that or make a comment on something. We'll figure out a way. But I'll do that. I'll bring some ANFIs to give to the audience next week.
Yeah, the best way to do that, I know some people don't like this, but the best way to do it is to do that. Well, how would they have to get the like the node factory? Would you have to actually send them?
Yeah, I would have to send to their wallet address. I would have to send the node factory, because you got to remember the node factory is a combination of tokens and a license married together. So it's basically an NFT that I would be sending them.
Wow, well, that's easy enough. We can do that right here.
Yeah, let's do it next week. I'll bring 3. I'll make sure that we'll have something to give to the kind folks that continue to tune in and listen to us babble on.
Sounds good. That's for next week. We got to do it, and then next week we got to try to do this earlier because it's getting hot over here and where I'm at.
Early's fine.
Yeah, earlier is a little bit better. But that's it. I think that's it. I think we answered everything. Eric Plato's come back next week. Fees. For some reason, the basic NFVH tapes were really worn out at a certain point. Very true. AI labor and AI transfer is the future. And where dogs drive loves Jerry. All right, everybody. If you want to follow Jerry, there's a link in the description. You can find him on X. I think he's going to start firing up the YouTube channel as well. We'll do some interviews, which we're all waiting for. We'll go from there. But that's it for today. Jerry, thanks for stopping by again on a Sunday. We appreciate it. That's it for today, everybody. I'll see you guys on the next one. Adios.